everyone, how's everybody doing? This is Ragu real estate broker with 401 team at LePage Ignite. Thank you so much for joining me on another video. Is the real estate market going to really crash amidst COVID-19 and what has been happening? Here's the honest truth. The truth is we don't know. Why don't we know? Because we do not have enough data to confirm that, oh yeah, we are heading towards a crash. That's going to take months on end to see how the market reacted to a current stimulus, COVID-19, and how it reacted in terms of price adjustment or not. It'll take us at least a couple of months to see the data to see, okay, whether something happened or not. But what we can talk about is we can talk about what the current situation is, and we can also talk about how the market behaved to similar situations in the past. Although no situation is going to be similar, like very much alike, we can see what has happened previously in history. So the current situation is that the activity in real estate has definitely slowed down. As you know, a lot of real estate brokers, agents, or salespeople are working from home. A lot of buyers do not want to go out in this situation to look for homes, so they're staying back. At the same time, we also have the sellers who are either looking to upsize or downsize for the spring market. They're saying, hang on a second, maybe this might not be an ideal time for me as my family is home and I do not want random people walking into my house amid a COVID-19 breakout. Fair enough. So we have the supply side, which is saying, hey, I do not want to list, and these are listings that were supposed to come during pre-spring market and spring market. And we also have the buyer side that's saying, hey, I do not want to buy. So you have a decrease in demand, decrease in supply, right? So what does that do to the market? It balances it out, but we don't know what's going to happen, how much demand there was and how much supply decreased until the numbers actually come out. Because you base your decisions, you base everything on numbers, right? Sometimes you may have intuitions that tell you, oh, the market is going to crash and etc. Nobody has the crystal ball and nobody cannot predict what's going to happen in 1 month, 2 months, 3 months. You cannot predict. Only numbers will tell you the truth. So let's go back in history and let's look at the dot-com bubble in 1999 when everybody, all the tech companies were making good money. Everybody was buying tech stocks until it burst. And what happened then? So how did the real estate market react then? At that time, ending in 2000 December, the prime rate was about 7.5%. Today, it's 2.4%, 2.45%. At that time, it was 7.5%. So from 1999 December to about 2000 December, the market, the average price, according to Toronto Real Estate Board, it went up about 6%. So that's how the market reacted for the dot-com. Soon after that, we had the Twin Tower attack, or the World Trade Center that was attacked. And obviously, there was a lot of hesitations. A lot of planes were grounded. So because of that, how did the market react? From 2001 December, right after the attack, which happened in September, to about 2002 December, the market actually went up on average price 11%. That's according to Toronto Real Estate Board, right? So the average price went up 11%, and the prime rate at that point was 4.5%. It was lower than what it was a year earlier. Because obviously, because of the dot-com bust, the government was trying to stimulate the market by bringing the overnight exchange rate. Thus, the prime rate came down from 7.5 to 4.5. Now, the next thing that happened is one of the biggest ever. It's the subprime mortgage crisis that happened in the States. The housing market went down so fast and so deep that the recovery took years. The stock market crashed. A lot of banks had to be bailed out in the States. However, the Canadian housing market, as well as the Canadian banks, pretty much weathered it properly. And at that time, our prime rate was about 2.25, and the average price went up about 4% from 2008 December to 2009 December. So although the increase wasn't as much as the previous historical events, it was 4%, but if you remember the subprime mortgage crisis in the States, it was really, really bad. And if I'm not wrong, they took about 3 to 4 years to recover. So it was a really bad crisis. So right now, where are we? Right now, our prime lending rate by the big banks is about, prime rate is about at 2.45%, right? And the months of inventory currently is around 1.5, 1.6. So the March numbers are not out yet, but 1.5, 1.6 months of inventory is still an amazing seller's market, right? We don't know how much new listings came on the market and what is the active listings currently. These are manually counted. Toronto Real Estate Board has not released the number. Hopefully they will do it in the next week and we can get a better picture as to what is happening. But as of now, I just manually looked up the numbers in terms of what happens in the 5 biggest regions. So we're talking about York region, Peel, Durham, Toronto, and Halton region. And combined, the months of inventory is around 1.5, 1.6. So that is a seller's market, definitely. So there's no reason to panic and freak out without actually knowing the numbers. And the prime rate, like I said, is at 2.45, right? This is one of the lowest we have ever been in decades. The lowest we have been, it was 2.25 during the subprime crisis, subprime mortgage crisis in the States. But after that, we're at 2.45. So cheap interest rate, less competition, and less activity, right? So that means maybe if you've been a buyer and you've been kicking yourself because you missed the opportunity to get into the market maybe last year, this would be a good time for you, considering you practice all the safety measures. This is a great time. Again, so the real estate market is not crashing as of yet, and we will need more numbers and maybe like a couple of months worth of data to see what is actually happening in the market. Another thing is, will we see some sort of change because of what is happening? Absolutely, absolutely. You know, this is COVID-19 was unexpected. We were on a trajectory to really, like, we were taking off for the spring market. We were at 1.2 months of inventory last ending of February. That was a treb altogether, and we're not sure what's going to happen, and we have to wait till the numbers come out. But definitely there's going to be a little pinch here, pinch there. But as far as a crash, I personally don't think, in my opinion, don't think that's going to happen, or we're anywhere close to that. So stay tuned when the numbers come out for March from Toronto Real Estate Board. We'll talk about it and we'll see what happened. Thank you so much.